हमारे हस्बैंड रोड एक्सीडेंट हुआ, दैट मीन्स उसका कुछ अनसेफ्टी थी, तो टाटा स्टील में मैं हस्बैंड का सर्विस हमें मिली है।
We were seeing women employees wearing the traditional sarees. That could lead to major injuries.
हम लोग टाटा स्टील में साड़ी से पैंट शर्ट में आना पहला लेडीज थे हम लोग। औरत सब कुछ कर सकती है।
Hello and welcome to a very special episode of Hot Commodities. I'm Manisha Gupta, and starting with first of all a recap of 2013, where the commodity fund investments have declined by a record $88 billion to $332 billion in the first time in 2013 till time there. We also have corn, silver and gold prices as the biggest losers. You have seen almost a bear market coming in for other 5 raw materials as well in 2013. Just to tell you, and starting with base metal prices, and while the most of this year has seen weakening trend coming in from this sector, the last month of this year has seen declining inventories, strong factory activity coming in from US, UK and China, and of course the Chinese imports, and all of that has been supportive, trading quite neutral to even positive for some of the base metals as we head towards 2013 end. Take a look at the gold prices, and that really has been a disappointment for 2013, biggest annual drop since 1981. The prices are down 38% from record highs of 1923 that you saw in 2011. They also are down 12% in the Indian rupee terms. The silver prices also have declined 36% in 2013, but the clear winner really has come in sense of the energy pack. While you are looking at the Brent and the NYMEX crude oil prices trading positive for 2013, the clear winner has been natural gas. The outperformance really has come in from there, where you have seen the prices trading at highest since July 2011. There has been a record drop in US inventories, and the gas prices, while they are up 35% in the international markets, it's trading 45% up in the Indian market. So clear outperformance in the Indian markets here. Let's get in then our guests, and Vijay Bhamwani is author and CEO at BSPL India. He joins us live. Also joining us from the show are Jonathan Barrett. He's chief economist at Barrett's Bullion. Jonathan, hi. Let's start with you first. And how are you reading the Fed tapering impact on commodities? And what's your sense as we head into 2014? How would you approach it?
It's quite an interesting concept, I guess, when you think that one cut in the stimulus gives us a chance to have quite a few more down the track. So I think it's a theme that we're going to be living with now for the next 12 months. As a result of that, it's interesting to see how commodities are playing out. And the initial reactions, particularly in some of the primary import markets, have been quite positive. Oil certainly had a good lift, and copper also has had a good lift. So when I think that the tapering is more all about confidence in the US economy, it actually provides us confidence for primary imports. So whilst this theme is with us, I think it'll bode well for a lot of our primary input markets.
Jonathan, also, do you see gold extending the declines going forward in 2014, and what would your range be for the next year?
Manisha, that's a tough question, there's no doubt about it, because gold has certainly disappointed a lot of investors throughout 2013. It is also on some very critical support levels, being 1170, and that's a focal which we really have to either make or break the bull trend that we've been living through. So I think if it breaks through that area, she can go quite a bit lower. I reckon that you could probably even see it down to about that 1070 level. There just really aren't any friends out there for gold. When you look at the list of all the people wishing to sell the metal, and we have no inflation, you can suggest that the metal does look soft. I'm going to be guided by that 1170. If it can manage to stay above there, then we could have a bounce, and bounce purely based on the fact that the physical demand for the metal should hold it. If it breaks 1170, and I think the prospects are pretty good that it will, then I think it does trade a little bit lower.
All right, so the gold prices can go lower up to nearly $1170 as well. But Jonathan, if you had to choose between gold and silver, where do you see more investment opportunity as we head into the new year?
I tend to like silver over gold. When I look at the market and the applications towards silver, remember silver shares a dual role as an industrial use as well as a precious metal. So I think I'd like to see the spread between the gold and silver favour silver. And I think if any fall in the silver price, I think will be less than gold. So if you were to say which metal would I prefer, I think it would be silver.
Vijay, getting you in the conversation as well. 1170 on gold and choosing silver over gold is what Jonathan wants to do for 2014. What's your sense?
I completely agree with that view because silver has outperformed gold very clearly. Since 2010, silver has been showing a greater degree of relative strength vis-a-vis gold. Actually, the outperformance is significantly higher from 2001 itself, but 2010 onwards, silver has shown signs of extreme outperformance. My guess is if bullion has to fall, in percentage terms, silver will fall less than gold, and whenever there's a rally, silver will rally more than gold, which calls for outperformance. And looking at levels, I would still maintain my view that you need to invest in silver in the physical format. Stay away from the leverage space because the cost of carry in the Indian context is frankly too high. So you segregate your capital in tranches of 10% which are allocated for silver. Invest in silver on decline starting from 42,000 rupees to maybe 42,500 band. Every time silver declines by 2,000 rupees, I think you need to step up your buying. Therefore, you're basically buying at not in an SIP in a SIP fashion, but you're actually betting on the price decline rather than any time frame. Every time silver declines by 2,000 to 2,500, you allocate 10% more. My guess is the industrial demand for silver is likely to cushion the declines as compared to gold, which is actually just a safe haven. So from here onwards, I think if at all there is to be a rally in bullion, it should be silver all the way.
Fair point, and as Vijay pointed out, it'd rather be a physical buying than futures. Jonathan, even as the global ETFs have seen a decline, do you think Asian physical buying really could support the gold and silver prices going forward?
Look, I think when you look at it, ETF selling has continued for some time, and we're around that January 2009 levels for a lot of them, which is quite low. I think the ETF market will only get a rebound when we get a pickup in uncertainty in the economy or some geopolitical event. People are switching out of the ETF market into more high-yielding areas. I do like the optimism surrounding physical buying, particularly out of Asia. When you think that China has overtaken India as the major buyer, if we do get that economic confidence starting to come in China, that we've got that stability there, then I think you'll find that the physical purchases will continue on a strong note out of China. Hopefully, that'll look to try and offset the continual selling we get from the ETF market. But I do think the ETF selling will be around for some time, but it'll get to a level where people will be comfortable with it.
Okay, so some softness in the precious metal price is not ruled out there, but let's talk about the base metal prices, Jonathan. And while the base metals saw a decline in 2013, it did see some rebound in the last few sessions on fall in global inventories. What do you have in sense of view with the supply-demand situation in metals, given the fact that the manufacturing activity in US, China and Europe also seems to be picking up?
I think the base metal markets really haven't done a lot over the last 12 months. So when I look at my forecast for 2014, I've got a very good picture, very solid picture for base metals. Being primary inputs, I can see that 2013 was a bit of a lost year for a lot of them. But when I look at the optimism surrounding the recovery, the tapering, the ability of the global economies to start to pick up, then I look quite strongly towards what's happening in the base metal complex. I'm also encouraged by early signs, particularly in copper, the physical demand, premiums out of Shanghai, and also the market moving into a backwardation bode well for early gains into 2014. I really do like copper. That's one of our picks for 2014. From both a fundamental and technical basis, the price looks set to have a good rally.
Jonathan, as you already pointed out, that copper is your top pick for 2013 and 2014 rather, and it has been holding above its cost of production as well, even as the other metals have seen sharper declines there. What kind of an advantage do you see with copper prices, and how much of a gain are you really expecting?
When I look at copper, I know that we're still looking at a surplus there, but I think if the economies start to pick up as we predict they will, then you will start to see inventories continuing to draw down, premiums remaining relatively well bid, and when I look for price action, I'm really looking at between 10 to 15, maybe even 25% lift in the price of copper. Obviously, that's quite a solid move. There's no doubt about it. But I think when you see the market and the inventory levels and how quickly they can diminish once we get that confidence, then I think it's quite realistic. So I guess when you look at the prices now, 7,250, I'd be looking for prices pretty much over that 8,000, 8,500 level towards the close of 2014.
Vijay, while Jonathan is expecting 25% of a rise in copper prices for the next year, what's your sense on that particular commodity?
Manisha, if you're betting on an industrial recovery, which I think I would bet on, both in the US and the Eurozone, I think non-ferrous metals, especially copper, should basically be doing well in the coming year. The trick in investing in this metal is to buy the dips rather than chase the prices higher, because I think overall, on an absolute year-on-year basis, the rally may not appear as strong as it was in the last 5 to 7 years, but it will give you ample profitable opportunities to trade on the long side, provided you buy panic bottoms. And whenever copper declines more than 3 to 3.5% in a week, I would be open to the idea of buying copper with a clear intention of selling out on rallies. Net, I think I would be happy to see copper rise 15% year-on-year basis.
Jonathan, while you and Vijay, of course, are talking about copper as your top pick, I just want to take you a step further. Are you overweight, underweight on base metals as a sector as we head into the new year?
Look, I think in the new year, I think I'll just have a balanced portfolio. Let's really see how it pans out. I do think that there are obviously a few issues in Japan at the moment which might sort of provide a few fundamental hiccups. But I think when I look at the whole complex, I would have initiating positions or have initial positions looking to gain. And once we get that momentum, then I'll pyramid quite quickly. Over the whole complex, I do prefer copper.
Vijay, a quick word on you from natural gas as well, because that has been really an outperformer for 2013. Would you say it's done with this team, and 2014 perhaps wouldn't see those kind of gains that we saw in this year?
Well, Manisha, natural gas has almost quadrupled from its bottom a couple of quarters ago. And the kind of rally that you've seen in 2013 in percentage terms, or the velocity of the rally may not be able to sustain, but net, I do expect natural gas to perform fairly well. It'll give you above average returns as compared to other commodities. The trick here is to buy well before the expiry of the next month, the current month series is due, because you run the risk of suddenly paying very high cost of carry, which is so typical of the Indian commodity markets. So either you bet on the mid and far month futures on panic bottoms, or you buy well into the natural gas counter in the current in the prompt month series whenever you feel price points are nearing supports. If you try to chase the prices up, the sporadic moves will be very sharp either ways, and then you basically run the risk of getting trapped in the cost of carry conundrum.
All right, so that's the view really coming in for natural gas prices as well. Still a buy call coming in for that one. And as Jonathan and Vijay pointed out, the best picks for 2014 continue to be silver over gold, and of course copper prices in the base metal sector. That is where you could be making your money in the new year there. With that, Jonathan, we'll let you go. Thank you so much for joining us with your picks for 2014. With that, we'll go for a break as well. When we come back, we'll talk about the agro commodities, especially sugar, which has been the most news-driven commodity of 2013.
Job and all is okay, but do you own a car?
Of course. I own a Volkswagen.